Today we're here with Frank Holmes, CEO and Chief Investment Officer at U.S. Global Investors. Welcome, Frank. In your previous interview, you mentioned Klondex Gold. Do you have any update on that?
Well, touch wood, we had a good gold market, and Klondex is up over 125%. They've done some strategic acquisitions that are going to demonstrate a very strong growth profile for the next 3 years.
What type of company do you think would possibly take them over?
Well, I think the company is going to take a Klondex out is going to be one that wants to be in North America. They want the assets to be in the U.S. and where you have extremely capable management. And when we look at Klondex, management has been able to make deals, acquisitions, develop production profiles that have high cash flow returns on invested capital. And that's been a really important factor for us, that when we look at the universe of 88 gold producers in the world, we like to rank them on who's the most attractive and who's most consistently delivered the highest cash flow returns on invested capital. And those stocks will perform as a basket.
Are you a believer in the peak gold theory?
Well, it's an interesting theory, and I think there's some intelligence behind it, because there's been so much money spent prior to 2009 on gold exploration from 2001 to 2009. And there's very few deposits discovered, very few 3 million ounce deposits. Big companies, mid-cap companies, small-cap companies. And this is the key factor, that there's been no breakthrough like fracking has taken place for the energy patch. There's nothing in mining that's been able to fast track an increase in supply.
Gold is hot right now. What are some of the technical factors you look for?
Gold is hot because we have negative real interest rates, and we have $13 trillion of negative rates. And any time, and I've been on your program many times, and I've said, whenever a government pays you a negative interest rate, that is, buy my 5-year government bond, deduct the CPI number, and if that number is negative, gold goes up in that country's currency. So we basically have most of the currencies in the world offering investors a negative rate of return, so gold is in a secular bull market. Now, how do you pick those stocks there? Well, it's a new discipline, and there's certain factors we've found are very important in screening the 88 global gold producers we track. One is who has the least amount of debt to equity. That's important on a balance sheet. The other one is who has the most revenue per employee, and the royalty companies, in particular the Franco-Nevada, the Silver Wheatons, and the Royal Golds. They all elevate themselves in Sandstorm as having tremendous revenue per employee. Like Franco-Nevada, over $15 million per employee, and Goldman Sachs is only $1.2 million. Newmont's $350,000 of revenue per employee. Other factors are cash flow returns on invested capital. They're very, very important because they show good corporate governance. They show good management of how they've allocated their capital. So when we create a basket of 20 best companies with the highest cash flow returns on invested capital, it outperforms all the gold indexes.
You previously mentioned Brexit as a positive, contrary to public opinion. What are your thoughts on this, and how have your investments done?
Well, there was so much negative thought process going into it. And really, it was a rebellion against taxation and regulation without representation, which basically led to America being created in 1776. And so I think it's really important to recognize that. The thought police was that this was bad, but actually it's been good. Gold has had on a tear. The pound has come off. But in fact, you've had luxury goods sales exploding, and Wells Fargo comes in and buys a building, and they said they saved $300 million. Ryanair fell dramatically, and then they had a record July numbers. The stock has had a turnaround from the bottom. So you get to buy great stocks, you get to buy real estate, everything's on sale in the UK, and there's lots of tourists are going to the UK.
Do you think that the current junior resource market bull run is sustainable?
There's a pattern to these cycles, macro cycle, and it's just under 5 years for these gold cycles. They run up for 5, they go through a correction, and the last cycle was almost a 5-year bear that bottomed in December of 2015. And I think we're in a secular uptick for gold. What's really interesting is that gold funds like ourselves, even though we're posting phenomenal numbers, are not getting the inflows. You're seeing that the generals still don't believe it. They've not done their macro homework. They're oblivious to real interest rates versus negative real interest rates, what it does to gold and silver. So I think that there's much more strength in this overall cycle as investors start to believe that this is real. And I think that the big opportunity for investors is going to be in these mid-cap and small-cap gold companies, because if you believe in the theory of peak gold, the big-cap companies are going to have to acquire and do the Pac-Man on the mid and small cap.
Are there any other junior resource stocks that you like at this time, and why?
Well, I think I mentioned, earlier, Klondex is just one of those great companies that very prudent management, very focused, and they generate high cash flow returns on invested capital. They're in the state of Nevada. I think that Hecla, which has been trying to buy companies and has acquired things, that this is a company that they should show up on their radar screen. Another one of the juniors is Dolly Varden. It's interesting because Hecla was trying to acquire that, and it was a private placement. We participated in it, and they canceled their bid for it. That's okay because the stock doubled. And that particular company is in a hot area in northern BC. They call it, in fact, the Golden Triangle because it's high grade. So I think the Dollys get taken out. Other juniors I think are important to look at where there's been discoveries, but its management is really key. As you go down to the junior space, the quality of management and their track record and their ability to understand the formation of capital and have low G&A to cost spending. So, because we found that those best performing gold stocks in the year to date had the lowest G&A to revenue. Well, low G&A for these mining companies has been very significant to survive. And so some of these CEOs have done a wonderful job. So let me take a look at Oryx. Oryx is a classic. It's done a spin out, but Oryx has a huge silver discovery in Mexico. It's near the surface, it's rich, and this is a type of company that will, I think, as they fast track the process of developing this resource, they get taken out. Another one would be, which is BMI, and it's Barsele. Barsele Minerals is in Sweden, big gold discovery. Agnico Eagle is a strategic partner with Barsele in Sweden. They believe it's like a global X. Agnico Eagle are very smart, and I think that they're not afraid of buying these companies out. They have a key position, so I think that this is an interesting company to get taken out. Other ones, when I go through my space, would be Newcastle Gold. Now, Newcastle Gold is in Southern California. Permitting's going through. The CEO, the entrepreneur behind it, Richard Warwick, is just a phenomenal investor. Anytime we get to invest along with other great entrepreneurs, I think when Frank Juster creates a new gold mining company with a vision, and he's very caught up with those high cash flow returns on capital, no wastage. I think that investors can rest assured that you're going to get capital appreciation.
Thanks for taking the time for today's interview.
It's always great to be interviewed by you for your audience.